Hi, I'm Kalila Reynolds and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. And guess what? We're now streaming on Spotify, Google Podcasts, Anchor FM, and Breaker. Apple Podcasts coming soon. So if you prefer to listen via podcast while you're driving or working out, I got you. Also head over to my website, KalilaReynolds.com, to subscribe to our newsletter and access episode summaries, transcripts, and articles. You can click the link up here or in the description box below. Now come on, let's get this money.
First up, after more than 20 years of strong growth in net profits, Sagicor Group Jamaica is reporting a 12% decline. But it's not all bad news. We'll speak about Sagicor's latest results and their plans for 2021 with President and CEO Christopher Zacca.
Would you say tourism was a failed experiment?
Not at all, not at all.
And later, the analysts weigh in on the latest market developments. Pharma has continued to record steady growth in its first quarter, ended January 31, 2021.
They actually saw a 15% increase in their overall revenue.
And the lab's revenue is up nearly 40% for its first quarter.
One of the things that they speak to is really a shift in the revenue mix.
We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
The government has imposed stricter measures to control the spread of COVID-19. Among the new measures are 3 weekend lockdowns starting this coming weekend. On days leading up to the full lockdown, businesses are being ordered to only operate for half day to allow staff to go shopping ahead of the stay-home periods. Churches are being allowed to conduct worship with up to 12 persons to run the live stream or recording. And speaking of gatherings, only 10 persons are now being allowed at weddings. Face-to-face classes have also been suspended until next month, while burials are now being permitted for 2 weeks under stricter protocols. Meanwhile, the government will be piloting a new e-commerce and delivery solution, ENDS, in Portmore, to enable quick-service restaurants and vendors to operate beyond curfew hours until midnight. It's to be launched on March 26. Fitch Ratings Agency has affirmed Jamaica's long-term foreign currency issuer default rating at B+, with the outlook remaining stable. Fitch's rating action is based on the expectation that Jamaica will post a primary surplus for the fiscal year. It's also based on a favorable business climate, a plan for less borrowing by the government, and a targeted fiscal surplus for the upcoming fiscal year. This will be supported by the one-off dividend payment of $33 billion from the central bank. According to the release, Fitch expects Jamaica's economy to grow by 4.5% this year and 5.2% next year. They predict this will be underpinned by a smooth vaccine rollout and a gradual return to normalcy in the tourism industry. The agency also projects the debt-to-GDP ratio will return to a clear downward trajectory. The National Housing Trust (NHT) is to extend the cash refund granted to public sector workers to April 2022 due to the impact of the pandemic. Prime Minister Andrew Holness made the announcement during his contribution to the budget debate last week. The provision was initially established following the freeze on public sector wages in 2016. It was scheduled to end this year. The Prime Minister also announced relief for mortgagors who've been unemployed for 12 months or more to access their contribution refund 1 year in advance. That initiative could be implemented in July. The budget debate ended Tuesday with Finance Minister Dr. Nigel Clark. Catch rebuttal highlights in our Wednesday newsletter. Jamaica Fiberglass Products has engaged GK Capital as financial advisor as they seek funds for growth, including a possible IPO. GK Capital made the announcement on Friday. JFP manufactures furnishings for many major brands in Jamaica and the region, including Starbucks, KFC, Wendy's, AC Marriott, Sandals, and Esotel. The company says it's ready to raise capital and focus on its next phase of expansion. Director Metri Siaga says the company aims to market and promote itself outside of Jamaica, noting that their performance during the pandemic has been a testament to their resilience. Proven Investments has entered into an agreement to acquire the shares of Fidelity Bank in the Cayman Islands, FBC. The agreement is subject to regulatory approval by the Cayman Islands Monetary Authority. Proven said the proposed acquisition of FBC aligns with its strategy of regional growth and is aimed at increasing value for shareholders. Up to the end of September 2020, FBC had total assets worth more than $350 million. JMB Group's preference share offer, which closed on March 9, was oversubscribed by 166%. Subscriptions totaled almost $10 billion. The offer opened on February 16. JMB had sought to raise at least $6 billion from 2 billion cumulative redeemable preference shares. The shares were priced at $3 each. They are to mature in 2028. JMB says it will exercise the option to upsize the offer to ensure all investors are allocated 100% of the amount of shares they subscribed for. Scotiabank is allowing customers to open bank accounts online. President and CEO Audrey Togwell Henry made the announcement at the company's annual general meeting recently. Existing customers who want to open another account are being allowed to do so under the first phase. The second phase will be expanded to new customers who want to transact business with the bank and open deposit accounts. Meanwhile, Scotiabank says it's prepared to work with the Bank of Jamaica BOJ when it pilots the digital currency next year. And speaking of digital currency, the Eastern Caribbean Central Bank will be launching its official digital currency, Dcash, to 4 of its 8 member countries by the end of the month. Dcash will be piloted in Antigua and Barbuda, Grenada, St. Kitts and Nevis, and St. Lucia. It's powered by Biting's digital currency management system. Since early February, the ECCB, along with early adopter financial institutions, merchants, and agents, have been in an exclusive rehearsal of the full Dcash operations. The pilot aims to create greater financial inclusion in the Eastern Caribbean Currency Union, as well as increase economic growth and business opportunities.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. And when we come back, we speak Sagicor Group's fourth quarter results and plans for future growth. This segment of Taking Stock is brought to you by Bulwark Insurance Agency, insurance made easy, and Massey United Insurance. How good is your insurance? Welcome back to Taking Stock. Due to the devastating impact of COVID-19 on the economy, Sagicor Group Jamaica's revenue has fallen by 9%. It's now at about $85 billion. And a chunk of that was due to a 54% drop in hotel revenues. Was their venture into tourism a failed experiment? Joining us now to tell us more, we have President and CEO of Sagicor Group Jamaica, Christopher Zacca. Hi, Chris. Thanks for joining me.
Hi, Kalila. It's a pleasure.
Yes, so you have plans to take the vaccine anytime soon?
As soon as I can.
You made an appointment yet, or you're not on the list yet?
No, I'm not on the list yet.
Okay, I'm the same way. As soon as it becomes available to me, I plan on taking it because we've suffered for so long. I think it's time that we start returning to some semblance of normalcy.
Yeah. So you know that we're doing a lot in terms of working with the government and trying to support their programs. So, you know, we have to really appeal to all citizens to take the vaccine. It's really the only thing that will get us out of the mess we're in.
Absolutely.
Well, as well as, sorry, you know, it's important that as we go along, because it will take a year to get everybody vaccinated, we have to maintain the protocols. We have to wear masks and social distance. I mean, it's sad what's going on in the hospitals right now. So all of us in the corporate world as well as in private sector generally need to do what we can.
So tell me, what has the past year been like for you, both personally and as a business there at Sagicor?
You know, it has been challenging. Obviously, it has been challenging, as it has for every citizen, every person in the world, really. Personally, I have, you know, managed to navigate it. So I'm happy that, you know, all of my family is well and just concerned about the losses in other families. From a point of view of Sagicor, you know, it really brought us together, believe it or not. We pivoted very early, moved to a work from home, significant work from home regime very early in the year, very early in the pandemic, because we were ready for it even before the first case. And we continue to serve our clients. Our you know, net promoter score, which we measure every year, was the strongest in ever, meaning that our clients really, you know, love what we do and we love what they do. So At the end
What
of the
you
day,
call it? Net promoter?
Net Promoter Score. So you're asked on a survey, independently done, not by us. Would you recommend Sagicor to your friends and family? And 1 to 10. 9s and 10s count as positives. 1 to 6 as negatives. 7s and 8s don't count at all. So when you take the 9s and 10s minus the 1 to 6, you get a net score. And ours was 43% for the group, and it goes up and down for various parts of the group. But all areas of the group, Sagicor Jamaica group, were, as good as anywhere in the world, frankly. And so I'm very proud of the team under such conditions.
But the company has taken a financial hit, just like all other companies in the financial sector have over the past 12 months, and that's understandable. Tell me what the extent of that hit has been.
Right. So yes, we did have a lot of headwinds. We made about $14 billion for shareholders, down from 15.6 the year before. The net reduction was about 12%. Given everything we faced, though, and in our banking, if we go through area by area, I think that would be useful to your viewers. Insurance did amazingly well. They actually made more money than the year before. Investments, Sagicor Investments, almost came close to the previous year. Sagicor Bank fell below the previous year by about 20%, but that primarily was due to lower transaction fees because people were just not spending as much in the economy. And also ECLs, which is a little technical, but under the financial standards, the accounting standards that came in a couple years ago, it's called IFRS 9. You look forward, and all financial institutions have to look at their assets and say, well, what is the possibility that they won't realize the full value and so on. So ECLs of every financial company went up in the pandemic, which are expected credit losses. Important thing is that that's not cash losses. And if the economy recovers, we'll get those back. So overall, as a core business group, we did very, very well. In fact, the 14 billion we made, 13.8, would have been around 16 if it wasn't for our tourism investments. So we took about a $2 billion hit based on our tourism investments. We own about 20% of Sagicor Real Estate X Fund, and our share of those losses would have come to about $2 billion. And I mean, look, who could have foreseen a pandemic that would shut down tourism throughout the entire world?
I know, but on that point about tourism, though, the playa properties, even before the pandemic, had been kind of a thorn in your side. Well, it's not your decision alone, but were there any regrets about that purchase?
No, none at all. We did it to diversify out of Jamaica, to diversify operational risk, to be able to participate in a listed entity where that entity can refurbish and expand without going to the shareholders, which we couldn't do with our previous structure. And to stay ahead in tourism, you have to invest a lot of money, and our core business is financial services. So I don't regret it at all. And prior to the pandemic, it didn't do that well, but frankly, it was holding its own. We weren't really worried about the performance as such. Maybe the share price, but we are not exposed to the share price in our accounting, in our financials. So look, the real damage was done last year. And the good news is we're out. We're going back to our core business. We're going to focus on hard commercial real estate in Jamaica and the Caribbean. We have a pile of cash in X funds and in our Sigma Real Estate Fund, about $14 billion or $15 billion. And we're going to be doing some big stuff over the next couple of years.
So you say you're focusing more on your core business now. Remind me, are you completely out of tourism now? I don't think so.
Pretty much.
You are?
pretty much on our Sagicor Group balance sheet, we really are only exposed through our 20% holding of X Fund, which owns the DoubleTree Orlando Hotel, which is right opposite Universal Studios. And that's coming back strongly post-pandemic. Well, I wouldn't say post-pandemic. We're still in it in a big way. But we've seen the numbers start to pick up from the end of last year. And as America vaccinates and reduce their crisis, which they have, you can see clear signs of that. We expect the Orlando Hotel to do well.
Would you say tourism was a failed experiment?
Not at all. Not at all. You know, again, we pride ourselves in contributing to national development and national growth. And I think we aided the growth in tourism through our investments. There comes a time, though, where, you know, you have to look at what's best for your shareholders. And we just feel that at this time, with the pandemic still raging globally, it's better that we focus on core and also focus on real estate development, which will continue to boost the economy as it recovers from the pandemic. But be more focused on commercial real estate that has a clear exit, able to display steady cash flows, etc. Tourism is something. Tourism is something, frankly, that is essential to the economy of Jamaica and the Caribbean. We're not abandoning it. If we see good deals, we'll jump in, but we'll do so in a way that is a more steady income stream rather than taking operational risks. So, you know, if there is a hurricane or an earthquake or another, I won't even say it what I was going to say. We wouldn't be that exposed. But the fact is we had a tremendous year last year in 2020. As I said, we made about 14 billion, maybe a few percent down over the previous year. But given all the headwinds, and if we add back the one-time losses, that will not repeat itself because we're now unexposed to X funds, except to tourism other than Orlando. We would have done about 16, which would have been above previous year, even with all the other headwinds in the other operating entities. So you know what? I've said it publicly, and I'll say it again. We have the best team in the world, and they really stepped up. When, you know, behind all of this results and outturn, there is bitter hard work and stress, and I really have to pay my respects to the team at Sagicor.
Yeah. So you mentioned commercial real estate being one of the areas that you are looking towards, and real estate definitely has shown its resilience throughout this pandemic. Prices have remained steady, if not gone up. But commercial real estate is an interesting case study because now we're seeing, because of the pandemic, some businesses deciding to go office-less and saying, you know, or reduce the amount of commercial space that they lease or buy because they realize that people can successfully work from home. What makes commercial real estate space attractive to you now?
So maybe the term commercial displays the wrong image of offices. We're not looking there. We're looking at, I mean, we own more, we're the largest controller of office real estate space in Jamaica. You know, our holdings are extensive through our pension fund management and our Sigma real estate funds, which are off balance sheet funds. The fact, though, is that when we talk about commercial real estate, we're going the gamut. We're going from, you know, large residential developments to warehousing, which we think has a big demand. I mean, all the numbers show us that there's a demand for warehousing which exceeds its supply. It can look at tourism or attractions as the industry rebounds, but we will be more on the owning and leasing side rather than on taking the operational risk.
I see. Okay.
So no, we're not building any more office space. I agree with you.
Okay. Okay, understood on that point. You mentioned earlier in your kind of opening overview that Sagicor investments almost equaled last year the previous year, 2019, which is impressive given what the pandemic did to the stock market in 2020. So kudos to your team on that.
Yeah, they did great. There were some positives and negatives, but overall it turned out okay.
Yeah.
We're not very exposed on our balance sheet to equities, so that helped.
Yeah.
But they in terms of their net interest income, their fee income for managing funds, their trading gains, etc., they did well. They did very well.
I think when you guys launched Select F as well, I think that was in 2019, it was an innovative idea, but for some reason, the market hasn't gravitated towards it. Well, they did it at the IPO stage, but since then, the share price hasn't been that great, especially for the financial sector now. Why do you think that is?
Well, it's just the underlying assets are local financial equities, and those are down significantly post-pandemic. All of us are below where we would have been if the pandemic didn't happen. So that Select Fund share price.
But even before the pandemic, it wasn't performing very well.
No, but it was up. It was over its IPO price. It didn't. It's not. Look, when we launched it, we didn't say that you're gonna. It's gonna be like a junior stock exchange price that doubles in 1 month and so on. It's really a steady, safe investment for investors who just want exposure to the financial stocks without spending money on or taking the risk around one particular stock. And the same with the manufacturing and distribution index, which by the way is back up to its par price. So we're happy about that. All our payment platforms are supporting the delivery economy in a big way. For example, some of the delivery apps, food delivery and so on, we are the e-commerce engine behind them, and we really are playing our role in terms of the new economy moving forward.
Swipe.
Yeah. So the jerk ticket.
Swipe in particular is a really good innovation.
Yes, jerk chicken man can take credit cards now, kind of thing.
Yes. Mm-hmm. So what's been the uptake on that? So how many have you gotten a significant new customer base with Swipe?
Yeah, I mean, we have it has exceeded our expectations. Not willing to share the details at this interview, but it has exceeded our expectations.
I think another big need that we've noticed in the pandemic is for not online banking. You already have online banking, but being able to do business online for small businesses to have a payment portal. I know that Sagicor does offer a solution. At the time when I spoke to you, sometime probably in the middle of last year, it was a relatively expensive solution. It wasn't really tailored to small businesses. Do you have anything coming? Because I noticed some of your competitors are now trying to capture that market to make it easier for businesses to accept payments online.
Well, our e-commerce portal has really come into its own. I think it's competitive. I think in terms of its technical platform, it's superior. And fee-wise, it's competitive, and it's being taken up by a number of businesses, big and small. So I think we're right in there competitively. We also have, as you said, Swipe for the really micro businesses and small businesses. And we also have our My Cash card for consumers who want to shop online, which is a prepaid credit card, which can be used internationally on all websites, etc. And it's paired with a mobile app wallet. Move money between, I can pay one of my staff members in my household without leaving my desk, etc.
As you say that, what do you think of the BOJ plans to pilot a central bank digital currency next year?
Man, I love it. It's the same thing as a Jamaican dollar. There's no difference except it's electronically controlled. It will be more efficient, less cost to the country to print pieces of paper, fully backed by the central bank, as is paper currency. It's the way of the future, not to be confused with cryptocurrency at all. I think that's the risk that the average person may see it as that, but it's not. It's a Jamaican dollar fully backed by the central bank, and it will open up a lot of avenues for seamless use of mobile and online applications to move money around.
So Sagicor will be fully on board when that time comes.
Yes, ma'am. And
looking forward to the day.
Yes, we are very excited.
Before you go, Mr. Zacca, are there any other opportunities that you're looking towards in 2021, 22 and beyond? What are the opportunities you see out there right now?
So we're digitizing all our processes and all our touch points. So we're going to become fully digital. We expect in about 2 to 3 years. We're almost there in terms of the stuff we got done in 2020 was tremendous. We accelerated all our timelines and got it done. So that's big in terms of client service and efficiencies, which I think will help drive our profitability. We are looking at, expansion in our insurance business in Central America and the Caribbean, in general insurance. In particular, we're looking at the Caribbean. In life insurance, we're looking in Central America. We have a great partner over there, one of the top Central American banks, Banco Promerica. And Costa Rica did very well this year for us, in terms of it being a new investment. It's a share with 50-50 with Banco Promerica, and we see opportunities as the economies of the region rebound over the next year to 2 years. We see opportunities there. We're going to be launching Sagicor Investments Cayman. We have it up and running, but we are waiting final licensing by the regulator, and we're looking at really exciting front-end technology for our clients there, which we will eventually adopt in Jamaica too. And Sagicor Investments Cayman will allow us to do a lot more deals throughout the region and offer opportunities to regional investors that maybe we can't do now. So that's also on the cards. So there's a lot going on. Our innovation team is working on exciting new, ventures and trying things that may be in, just in a lab right now. And as we go on, I think our investors, our stockholders will be very happy about what's going on at Sagicor. And they should be happy based on what happened last year. We did, as I said, exceedingly well given what we faced.
Well, thanks for joining me, Mr. Zacca. All the best to you and your team.
Thank you, and all the best with you and your profession, your journalism. You're doing a fantastic job.
Thank you very much.
Thank you. Bye-bye.
Up next, we've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency, Insurance Made Easy, and Massey United Insurance. How good is your insurance?
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined, with the combined index losing less than 1%. 101 stocks traded across both the main and junior markets of the JSE for the week ending Friday, March 19, 2021. 49 advanced, 42 declined, and 10 stayed the same. Nearly 98 million shares changed hands on the Jamaican dollar market, totaling $580 million. Diamond Trading Company traded the most, taking up nearly 17% of market volume. The stock gained 5 cents to open the week at $2.60. Jamaican Teas traded the second highest, with people buying and selling nearly 9 million shares in the company. The stock lost 1 cent to open the week at $3.24. And Wigton Wind Farm rounded out the most traded, taking up 9% of market volume. The stock gained 1 cent to close last week at 65 cents. Now let's see who had the biggest gains. Speculators are back at it with Ciboney Group. The stock price more than tripled last week to close at 90 cents. AMG Packaging and Paper Company rose 22% to close last week at $2.08. And rounding off the biggest gains, JMMB Group 7% VRJMD CR preference shares stock advanced 15% to open this week at $2.12. On the losing side now, G West Corporation ordinary shares was the biggest loser. Its stock price went down 81 cents. Everything Fresh was second on the list. Its stock price down 18% to open the week at 90 cents. Rounding off the biggest losers, Knutsford Express Services, which lost 13% down to $5.36. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Ideal Portfolio Services. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by a wealth advisor at Ideal Portfolio Services, Dwayne Taylor, and research and strategy analyst at Sagicor Investments, Jodianne Aris. Hi, Jodianne. Hi, Dwayne. Welcome back.
Hey, Kalila.
Hey, I like the way. Let me wave at you too. I love it. All right, so we have a few things to go through on the markets this week. And of course, the big topic has also been the budget debates have been in full swing. So as of the time of this recording, we've had almost all the presentations. By the time we air on Tuesday, though, all of them will be done. So any highlights for you so far, Dwayne? What's stood out from the speakers for you?
All right. Well, on Tuesday night, opposition leader Mark Goling actually spoke on some of the highlights that Dr. Clark went through the previous week. In particular, he chose to zone in on the dividend payment. It's actually a $33 billion dividend payment that will be issued by the Bank of Jamaica to the government to help with the social and economic recovery, obviously with COVID, and also to help with the vaccine program. I think in the focus of the discussion, there was a bit of concern about how this dividend came about. He was focusing more on the foreign exchange gains that the Bank of Jamaica would have made during this period of time, because the dividend payment stretches from 2018 up to 2020. However, when it comes on to economics, we have to be very particular with the jargons that we use. And in particular, he had mentioned that because of the dollar devaluating, the Bank of Jamaica was able to hold a long position in foreign currency that allowed them to benefit in the long term. So essentially, he was saying because the dollar is going down, the Bank of Jamaica benefited in the long term, and they made some serious capital gains off of it.
No. And that's why they were able to pay the dividends. He even went as far as describing devaluation as a tax on Jamaica.
Right. But the thing about it is, we have to be keen on is that there's a difference between devaluation and depreciation. Now, devaluation would suggest that there was a deliberate effort to drive the price down, whereas depreciation, takes into consideration inflation. Our currency is matched with the USD, and when our inflation is higher than the US market, we will start to see the dollar depreciate. So that's a natural occurrence. Whereas devaluation would have suggested that there was a deliberate effort to push the Jamaican dollar, or to depreciate, for the value of the Jamaican dollar to decrease. So as much as it was a very fruitful discussion, because Dr. Clark was able to bring up the fact that BOJ since 2018 was the first time they were really seeing any significant profits, and he actually showed a graph displaying the performance of their annual profits
or any profit at all, not just significant profit.
I mean, exactly. They did see some small margins of profit, but nonetheless, he was able to rebut that argument and essentially bring to the fact that BOJ was profitable in 2018, 2019, and 2020, and as such was able to offer that as a sense of relief to both the government and the Jamaican people. So it was a good discussion, but that was definitely the standout for me in the debate so far since Tuesday.
Jodianne, for you, anything stood out? Anything really caught your attention from the presentations?
Yeah, I think the discussion surrounding is the transfers thus far be sufficient? I mean, one of the things with our crisis is that particularly the poor will be most impacted, and we have seen fallout in tourism and the related sectors.
You mean the cash
And what are the
transfers? So the
right,
like the
right,
set cash and the best
cost
cash and the
benefits
care
and right,
program.
right, right. Right. So is it sufficient? Is one of the concerns that has been coming from opposition, in particularly within the context of the crisis, and several related sectors would have been impacted. Is it more that government can do? How best can they balance? In a situation where revenues are declining and they still have to put in place measures to spur growth going forward. How best can they, at this point, still support the vulnerable in terms of cash transfers while maintaining steady path for everybody going forward? And I think that is one of the concerns that will remain, because you don't want your vulnerable groups to be coming out of the crisis or taking much longer than everybody else to recover. And so it's how it is that we play, or how is it that we fashion everything so that we can also benefit those persons who are at the lower end in terms of getting back to recovery in the same space as which the overall economy will.
What do you think about that, Jody Ann? You think they're spending enough in that area?
I think there's a little bit more that can be done. I think when you look at the fact that they have been given, there would have been a set that was done in April, and that we haven't seen, and it's almost a year later. If it is that you want to compare with other areas that have probably given about 3 or 4, disbursements, I think a little bit more can be done to get to the more targeted persons who are in need. In terms of, I think one of the things that government has been trying to do over the years is this whole idea of unemployment insurance. And I think if you can get something like that going, then it's a way that you could get benefits to the persons who are definitely in need of. So I think what they have done is good. And you definitely have been expecting or seeing that government has been giving transfers, not just locally, but, right throughout the global sphere. But I think a little bit more can be done if there is any, benefits or specific transfers that could be done within this fiscal year that could, actively benefit those persons in need. That would be good.
Dwayne, let's look at the markets now. So Indies Pharma, I notice, has been a standout in the past quarter. Revenues are up. Their stock price is up significantly as well. What's up with Indies?
Right. So we just got past their first quarter, ended January 31st, and the results were pretty good. They actually saw a 15% increase in their overall revenue comparable to its previous quarter. So that's actually an increase from 193.7 million to 223.5 million for the same first quarter period. The net profit also went up by 20%, from 39.6 million to 47.5 million for the corresponding quarter. So definitely positive news for them. The executive director, I think his name is Mr. Mumpuri. I hope I'm not butchering that name, but he went into the fact that he credits the performance to the effort of the sales team, and also the timely return of highly demanded products that they have on the market. So definitely a good push by them. I mean, there are other areas to explore. They've always looked to diversify their product offering, and I think most recently they've opted to target the orthopedic and also the orthopedic and joint rehabilitation segment of the market. So they're diversifying. They have a strong sales team that has been pushing their products across Jamaica, and I mean they're in over 400 different facilities across the island. So it's no surprise that they've had such a strong performance. And I think up to yesterday they actually made an announcement that they're looking to introduce some new products onto the market. So Indies has developed a formula that has worked for them through having a diverse product line and a strong sales effort, and they're reaping the rewards right now. So we look to see even more positive returns over the course of the financial year.
Yeah, and they're in a good industry right now. So you want to be in medical supplies and medical services during a pandemic. Because I think, and I should point out too that I've been trying to get Indies on this program. Like I really want to have them on. So I think shareholders are and the market investors are finally starting to see the value of indies because they hadn't performed that well early on. So after the IPO, they had their initial surge, but then the stock price, wasn't doing that well, and it's finally rebounding now. Finally, people are starting to see the value of an indies and what they can what they can provide to the market. So another
just to add to Indies though, that the outlook for them is pretty strong. I think they had raised some funds in 2020 that would be looking to getting approval for 2 new products that would be FDA approved, and so that brings a very strong outlook for them, as well as the development of their business park. I mean, a little bit moving towards developing in the commercial real estate space, and so for them to have a decent outlook. And as Dwayne would have mentioned, that they have been improving in terms of the bottom line, and that relative to their stock price, you see now where the PE is moving more in line with market, and so it's really coming at the price that it is based on their performance becoming a stronger buying point for that company.
Another one of my favorite junior market companies is the lab. I always like looking to see what the lab is doing, where their stock price is, what their revenue growth is. And this past quarter, their revenue is up almost 40%, Jody. And what's behind that amazing growth?
So the lab is doing well, and they have been doing well, and we're seeing that continuing. And one of the things that they speak to is really a shift in the revenue mix. And I mean, they find that, production, as well as I think there's a media placement has been up. And that is largely driven by the fact that you find media placement and production, right? And that is largely driven by the fact that within a period of pandemic, that there's increased demand for online content. It is now how it is that businesses are meeting with clients, are meeting with their customers, and it's really through an online interface, and not so much probably as you would have had before. Really see companies having sales in the supermarket and tasting and that sort of thing. They're really coming to you in an online space, and so that would have benefited a company like Lab, even though they may have seen reduction in terms of the ad agency portion of the business. They're really seeing increased production, because you would have imagined that more companies are now saying, hey, let's do investor briefings, hey, let's have more discussions, let's put more content out there to really keep engaged with their clients and customer base. We also noted that net profit is also
so they're getting that. So they're getting that those jobs to do the production.
Right. So I mean, there are still winners, even though we're within a period of a crisis. We also saw net profit being up, and that's also about 37% up. And if you look at the balance sheet, there's also a boost to the assets based on the increase in cash and cash equivalents, which really speaks to probably holding reserves in a period of uncertainty. Generally companies are boosting up their cash and cash holdings, just in case there's still a period of uncertainty and anything could happen. So you still want to have that sort of buffer there. We noticed that finance cost has increased, as well as finance income, and they have made a shift. They used to have some long-term loans, and they have reduced that position and increased in terms of what they call lease liability. So they have actually gained property that they now have right of use for, and just a matter of the recording, they now have a lease liability, and that has increased. So we see still a strong balance sheet from them. In terms of price appreciation, since the disclosure of these results, we saw that up at almost 10%, and we're still optimistic, and we're still positive and bullish on this company. So that's one to continue to look out for.
Dwayne, any thoughts on the lab? How you feel about the lab?
I mean, just their response to COVID has worked out for them. The fact is, a lot of companies have had to diversify their operations. They've had to look for ways to adjust and still remain not just profitable, but just be able to bring in revenue. And Lab is one of them, similar to Indies, by diversifying their operations, diversifying their product offerings, and it's working for them in the long term, in the long run. So I look forward to see what the Lab has to offer. I mean, when it comes on to marketing, I know how important it is, and in a climate like this, where a lot of the big companies are so dependent on their departments or outsourcing it, the lab has a unique space to operate in and can definitely seize the opportunities that are presented to them. So definitely a positive outlook for them.
For sure. Kudos to Kimala and the team. They've been doing quite well. Always impressed with them. Thanks, guys.
Yeah, man.
Welcome.
All right, Kalina.
This segment of Taking Stock, The Analysts, was brought to you by Ideal Portfolio Services. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at KalilaReynolds.com and turn on those post notifications so that you can be the first to see all of my other features. We want to help people learn more about money so we can all get this money together. This week on Money Mondays JA, COVID is one. In Jamaica anyway. It's an anniversary we'd rather not observe, but we'll look back at some of the changes in Jamaica since the virus arrived on our shores. And on Money Moves JA, the country's new budget is out. I'll tell you what's in it for small businesses and entrepreneurs. Follow me on Instagram and Twitter at Kalila Ray, and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Also visit our website, KalilaReynolds.com, for financial information you can use however you like it. Watch, listen, or read. Now, tell a friend about Taking Stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Kalila Reynolds. Stay safe.
Let's get this money.